Good morning, everybody. 8:10 a.m. It is May 21st. Welcome to my channel. Now the markets. Remember, I gave you those levels yesterday. I said around 215, and the Nasdaq is the most traded price of the year now. And I said that had to find acceptance over that level to move higher, and the Nasdaq could not do that. Okay, so we did get a move like up, not up. The market was range bound for a while. Okay, and the Nasdaq and the ES disconnected. All right, I was actually short in the SPY at around 594. I'm sorry, 593.69, I believe. I had some nice excursion, but then where I had my stop, I took profits, and then I had a piece left. Got stopped. Then I saw the market, but the Nasdaq was making new highs, while the ES was down by the lower third of the session. When the Nasdaq was pushing up into that major level, I was like, oh man, this could be a nice short. But it was like after 12:30 or something, I believe. And I was like, you know what? I already made some money today. I'm like, oh, this short could be setting up again. Well, that was the short that I was looking. That was why I was short earlier, because we finally cleaned up some of that poor structure I talked about yesterday. Okay. And then the market got bought up. And Trump was supposed to talk about 3 p.m. He didn't wind up talking until after the market closed. Okay. Because we went down all the way to, let's see, in the SPY. I might as well just put the chart up here and show you guys what I'm talking about while I'm doing it. All right. So right here, 592. I don't have the gamma levels up there right now, but that was a large negative gamma level here. And if we broke that, it should have caused a flush, which it did. And I was short here. I'm short like up right here. And then I took this move to here. And I was looking to break these lows. Okay. Didn't get that. We pulled back with the NASDAQ strength. And then we couldn't. I mean, my original stop, it wouldn't have been touched and I would have nailed that. But that's all right. This is trading. I could have entered. And then later on in the day, when we hit 590, which is also a major gamma level, okay, I almost got long right here. I would have did like a half risk, but I almost got long at 590. And I was like, oh, Trump's supposed to start talking. And the market did this, I think, believing Trump, whatever Trump's going to start talking, and then he didn't. And then the market had to come back to the mean. Okay. So I had another nice trade. I wasn't, at the time when I got short, it wasn't ready to dump. And then it did, right? And then we recovered. But since then, we've took a dive back down. Okay. Because you can see here, see how the Nasdaq was rising up like that. Let's look at look at the SPY. You see how it didn't have that rise up? This was the rise. Oh, I'm sorry, this was the rise up. Didn't even make new highs. See how the Nasdaq made new highs. And where did it hit? It hit that level that I talked about yesterday. Okay. So for me, this market has been pretty easy to read lately, and just got to be patient. That's basically it. You got to be patient, and you get rewarded. I didn't have the right timing on yesterday. Now the market internals, okay, that's what I use to gauge strength here. Right here, you can see they were mixed yesterday. See how, like, whenever they're like this, that means I'm gonna go long or short at the edges, okay, because there's no weakness or strength in the market. Okay, that's where I already right away, and we were inside yesterday's ranges, which is a horrible location to be. You're at the midpoint of the previous day. It's going to cause chop. And so I waited for the first push up to get some excess in. And I said, all right, I'm going to short based on really the NASDAQ and Anchor VWAP that I was showing. I'm going to show you guys in a little bit. Okay. And then you could see the market was just neutral. And then finally, it finally took that dump down here, and then it recovered. Okay. Because you can see internals were not that weak. So I didn't think, that's why I almost got long, because I was like, this doesn't have the weakness to push lower, right? But Trump was ready to speak. That's the only thing that probably kept me from going long. It would have been a nice trade, but that's all right. Still had the day, ended the day green, which you can't complain about. Okay, so now, all right, do this every morning. Hopefully, subscribe, set an alert, and give you the market news, the stories of the market, basically. Leaders and the laggards, the economic calendar. We go over daily charts, we go over a bunch of stuff, long and short trade scenarios later on. All right. And without further ado, I forgot to do my introduction. Welcome to my channel. My name is Steven Gonzalez. I use market profile and buying profile to find structure in the markets, along with supply and demand, gamma exposure levels, the most traded price of the year, the month, the week, and the previous day, along with anchor VWAPs and my market internals. Market internals, picture it like the human body, your lungs, your heart, your kidneys, right? That's what I look at the internals like of the market, and I base everything off of that because the market can't outperform the internals. Okay, market's never going to do something that I don't know it's going to do or what it's capable of. That's why it's my edge. Okay, now let's get right into futures and see what's going on. Okay, we were gapping down earlier. Okay, so let's just check it out here. Okay, now we got a VIX, right? VIX is up 3.81%. We're at 18.7 VIX, 18.78 VIX. Crude is bouncing here, okay, up 1.60. 10-year yield back up. That pesky 10-year yield, it's affecting mortgages. Mortgages came out higher today, 6.92. Okay, 10-year yield is locked with the mortgage rates. All right, Ethereum up 1.35, gold's up 0.87, silver's up 0.44, Bitcoin's down 0.45, dollar's down 0.48, ES down 0.60, Nasdaq down 0.62. The Dow is down 0.79. Now United Healthcare is helping that because United Healthcare got a downgrade today, and the market doesn't like it. All right, it was down more earlier. It was down to like 298. It's since recovered a little bit. It was down more. It was down more like 8%. Now it's down 4%. So 30-year bonds being sold, and the Russell is down almost 1%. Okay, the Russell's very sensitive to rates. All right, so that's what's going on there. Let's look at the Max 7 here. Do we have a leader? We do. AMD. AMD's up 0.48. Tesla's up 0.46. Google's up 0.29. Then we have a bunch of laggards. Let's go into the over the 50 percenters. Microsoft down 0.53, GE down 0.54, JP Morgan down 0.69, Meta's down 0.75, Nvidia's down 0.77, Amazon down 0.90, and the laggard of the day is Broadcom. Broadcom is down 0.94. Now, see, Nvidia still has to report earnings. I believe it's May 28th. Broadcom, that would be May 5th. Let me make sure I'm right about the May 28th thing. Yep, May 28th, Nvidia. All right, moving on to sectors. All right, let's look at sectors because that's what moves markets. Okay, now certain sectors only move the markets, like energy is not going to move the market. Okay, but it's the leader. And how is it the leader? It's flat. It's not even. There's not even a positive sector this morning. We're gonna. Ooh, hold on a second. Sorry about that. All right. We got energy. All right, let's go here to the 50 percenters. We got healthcare down 0.50 within help of United Healthcare. Okay, with the help of United Healthcare down. I don't know if that's help, but that's why it's down. Financials down 0.53. Financials down 0.53. Okay. We have semis. Remember, risk off. Semis risk off when it's down 0.53 negative. And technology, the largest weighted sector in the S&P 500, down 0.68. That's your Microsoft, your Apple, your Nvidia, your Broadcom. Okay. The heavyweights. That is down. Okay. Whenever that's down, you pretty much your market's going to be down. Okay. 30% of the market cap weight, it's going to be down. All right. Let's move on to economic calendar. Some news here. Economic calendar it's light this week. So you got the 30-year mortgage. We already got that, 6.92. We got crude inventories at 10:30. Fed barking speaking at 12. All right. So not a lot of Fed speak prior to that, which is fine. Hopefully, I'm done trading by then. So today, not a lot of data. Okay, now remember this weekend's Memorial Day, so I expect volume maybe to start tapering and tapering, depending on what happens in the markets, right? Because then you have a 3 day weekend, right? I believe the markets are closed on Monday. All right, so a 4 day week next week. All right, so that is economic calendar today. Let's get into some. Let's look at earnings here, real quick. The really only one to note is Palo Alto. Disappointed. Palo Alto reported they are down. All right. What else? Toll Brothers. I didn't get to see what they did. Let's see. Before the open today was Baidu, Target. Like I said, I don't know why TJX makes me think TJ Maxx, but I don't believe that's TJ Maxx. But I could be wrong. I don't think it is. Wix, Medtronic. Let's see. Canada Goose, Xpeng. Today after the close, Snowflake, Zoom, Urban Outfitters. Okay. Tomorrow before the open, BJ's, Advanced Auto Parts, Lightspeed, Ralph Lauren, TD Bank. All right, that's what we have here. Let's go back here. Let's look at some of these movers here. Lowe's stock rose 1.6 after the home improvement chain reported net sales in the first quarter that were roughly in line with estimates. Target stock fell 4.2 after the big box retailer slashed its annual sales forecast after posting a sharp decline in quarterly same-store sales. Nvidia stock fell 0.9 after CEO Jensen Huang said that the U.S. export restrictions on artificial intelligence chips to China had failed to prevent Beijing's advancements in the industry. Palo Alto stock fell 3.4 after the cybersecurity company reported a 12% increase in operating expenses in the third quarter, along with revenue roughly in line with estimates. Xpeng stock rose 5.3 after the Chinese electric vehicle maker reported a narrower than expected loss for the first quarter. Take Two stock fell 4.4 after the video game company announced a 1 billion common stock offering. Medtronic stock rose 0.2 after the Wall Street Journal reported that the medical device maker plans to separate its diabetes business to standalone company. Baidu stock rose 2.1 after the Chinese search giant reported better than expected revenue. Wolfspeed stock tumbled 60%, my lord, following a report that the semiconductor supplier was preparing to file for bankruptcy. And here's the United Healthcare. Stock fell 7% after HSBC downgraded its stance on the healthcare issue to reduce from hold. All right. Moving on. The juice doesn't have much for us today. Only thing I could see is U.S. House Speaker Johnson. We came to 40,000 SALT deduction, a cap agreement. Moving on here. All right. Let's see. We already talked about Target, Nvidia, Lowe's. Let's see. Universal's new Epic Universe Park challenges Disney in Florida. Let's see here. Let's see. Just going to go over key stuff here. Yep, that's about it. That was quick. Now we'll go over some breadth charts real quick. Let's look at the breadth charts. Remember, I keep talking about this. 84.32% of the S&P 500 stocks are above their 20-day simple moving average. Remember, we're getting frothy. Like I said, push up into the 90s. Frothy, probably due for some correction, some pullback. Okay, if you just look in the past, this has been a very toppy area here. Okay, you can see once you reach around above 85. Okay, if you go to any of these, look, a little dip in the market up here. There's the SPX. Little, you get a little dips. Doesn't mean it just sells off, but you get a dip, right? So it's just the overall breadth doesn't make me trade. Right now, bullish percent index in Nasdaq 100 is at 85. Okay, that is very frothy. 85% of stocks are on buy signals. That is very frothy. Look where we came from. My lord, that was a friggin', what was that? 5% are on buy signals. Man. Woo. All right. Let's look at the S&P 500's Boulder Percent Index. We're at a 76% of stocks are on buy. Like I always said, it's getting frothy out there. It's getting frothy out there. Doesn't mean I just sell the boat. I'm not saying it's bearish. Okay. I'm just saying, look where we're at. We're at extremes. Okay. I got the P call warning as well, and I'll show you that in a second. Basically, the put to call ratio is at extremes. I keep getting these alerts And that can keep happening, but once I keep getting that alert, it reminds me, you know what? This market's probably a little overdone. Could do a correction or something else. All right. Now, that is that. Let's move on to daily charts. I can show you that put to call ratio. Let's just start with the put to call ratio so we can before we get to the daily charts. So if you want to know that ticker, that is $ P call. Okay. And this is put the calls. So puts, when puts are being overdone here, right? I have two settings here, 1.17 and very extreme 1.47. Okay. But when the calls are getting like real overdone, you go to these levels here. Just zooming in here. See, I have one set at 0.50 and I have another alert set at 0.46. We recently just hit 0.46. And okay. And look, we're actually down here on May 14th. Okay, May 14th. So as long as we stay down here, it's pretty frothy. All right, it means puts are cheap, and it's just getting a little overdone. And every time you see this, let's just do this real quick. I'll do it real quick. I'll put a comparison up here. We'll just put a comparison of the SPY up here. We'll make it a line chart. We'll make it stand out here. We'll make it green. Okay, so there's the green, the S&P 500, right? So if we just zoom in a little bit here, let's just get some history here. So let's pick a moment where we dipped down low here. Let's look at the markets, what it did. Look at that. See how it reached the top? And then the S&P fell. See that? Let's go to an extreme to the upside, right? Look at that extreme to the upside. Look what the market did. Right in line here, it bottomed, and look, you ripped up. So it's just a good thing to keep on your chart. Okay, I'm gonna get rid of that. Let's get rid of that. Let's get rid of that. Remove. Okay. Yes. Let's go to that SPY, and we'll get into daily chart. Oh, I'm not even showing you. My bad. Hold on. Hold on. Can I undo that? Nope. Okay. Let me put that up there again. I just want to show you guys. My apologies. Let's do it here. Again, I'm going to make that green. You know what? Maybe bars stand out better. Let's do bar chart. All right. So this is what I wanted to show you. Here's the peak wall. Okay. Here's an extreme level. Right here. Let's go with extreme level down here. See this here? That is calls being way overbought. Look up. Here's that candle right here where those were overbought. And look what happens. Boom. You take a dip down. Right? Take a dip down. Now, on the other side, okay, it's an extreme level of puts being bought. Look down. There's the S&P, and it bottomed, and it rose. Okay? So that's just something. I have those alerts set for me. So I get triggered. Hey, P call. I get possible reversal. I'll get an alert. Okay. So hopefully you learned something new there. You can just put it. Like I said, I don't look at that and go, "Ooh, I'm shorting." Okay. You need other stuff to have some confluence. Okay. All right. Let's get into the daily charts. A little long-winded there. All right. Now in futures, we have broken the channel. Okay. We have broken the channel. So there are two different channels there working with us. Now see, yesterday, you kind of have this 3-day balance, can maybe like a 3-day balance happening, right? You finally close lower, okay? And you keep banging your head against last week's highs. Last week's highs, I can't see it, but it's right here, around 594.46, okay? Last week's highs. It keeps banging our head against that. Where are we at now, though? 589.75. 589.75. You're pretty much at yesterday's lows. Okay? pretty much at yesterday's lows. Now we still have this trend line in the SPY. 9 EMA daily has not been touched in a while. Let's look at futures. Here's futures. Okay, you can see this balance area here, almost hitting the 9 EMA daily. You can see we're right at yesterday's low, just like I said. Okay, so just have to see. And you see last week's highs right here at 59.77 and a half. That has been resistance. Last week's highs. Okay, very clear to see it on the chart. Let's look at the Qs. Here's the Qs. So the Qs. Now look at the Qs. It's different, right? You actually have a 1, 2, 3, 4, 5-day balance in the Qs. Remember that? And in futures, the around the 215 level, now 214.35 is the most traded price of the year. So it's just getting very, very congested here. Okay. And whenever you do this, you're going to go up or go down. You're going to trend up or down. Okay, where are we now? 516.90. You're right at the lows of yesterday. Right at the lows of yesterday. Now let's get a better picture of it in futures right here. Look at how much balance is here. And look at that resistance. That resistance is right at last week's highs. 215.29 right here. Right there is resistance, last week's highs. That's why I have these on my chart. I can really see last week's highs right there. Okay. 9 EMA daily is pushing up here. Right at the lows of this candle. All right. So this is balance. This is looking to make a move. Now, this is not the best structure here. Okay. You can rip down. Okay. We are due for some type of correction, not a bear move, correction. Right? It's been very frothy. Look at this. Whoop, 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 and just up, 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 up. All right. You need some type of correction or pullback, or we just keep moving sideways. But that's what's going on. All right, moving on. Triple-headed monster. Let's just see this thing. Let's go to your bond market. Little pesky bond market. All right, you're kind of now, right? You're holding this right here, and you're consolidating. This is kind of crazy. Okay, the higher yields go is usually not a good sign for the markets. Then people are going to flock to bonds. Okay, the higher the yields go, the more attractive bonds look, and stocks don't. If you don't see rosy times ahead, you're going to go, oh, I can lock 4.5 yield and not have to worry about any risk. Then you might start doing that. Okay, this is your triple-headed monster. Now, looking at the dollar, that dollar here is just, let's get rid of this trend line. All right, we got trend line here, which has been broken. Okay, but you have this support here. Okay, I'm not going to ignore that support right here, 99.20. All right, so really, the dollar is just in this big consolidation here. All right, try to move up, hit this trend line, and let's see what it does. And it's not really giving any clues what it's going to do right now. All right, let's look at the VIX, and we'll finish out this triple-headed monster, get into those hourly charts. The VIX, your fear gauge, we're at an 18.8. We're in this range, okay? We're in this range right here. Whoop. All right, that's your VIX. Let's move on to your hourly charts now and look at the important levels, okay? And part of the reason why I had a short yesterday. Okay, let's look at these charts together. These charts have really been a nice confluence for me. Okay, let's look at these levels. All right, so we are back at an important level. Remember what I said about this level right here. Okay, it's the most traded price of the month and the week. I'm sorry, of the month now, 59.08. The most traded price of the week has moved up here. Okay, move up here. Still an important level, the most traded price of the month. Okay, we came down here, remember, from the weekend. Bottomed where? Anchored VWAP from the US-China trade deal. And we found support there. Now look where we are again, the anchored VWAP from the US-China trade deal. Okay. We broke this major trend line channel yesterday, right here. You broke it, came back up, retested the back side of it, and you went down. Okay, so we have broken that major trend line. Okay, and right now, US China trade deal anchored VWAP is supportive and with the most traded price of the month, 59.08. You can see this little spike right there. Okay, now I have an anchored VWAP from these highs. That was resistance yesterday. You see that? And anchor VWAPs are beautiful because they just say who's in control. Okay, there's sellers are staying in control here. Okay, now there's a trend I put here. There's last week's highs. We cannot break and hold above last week's highs. So here's the important part, right? We broke a major trend line, right? A major one. But look here. You have to look here as well. You have higher low, higher low, higher low, higher low, higher low. Okay? You really need to take this swing low out to get some. And what does that mean? Taking out the most traded price of the month. So what could happen today? We could push up. See, we pushed up, hit the supply. What I would like to see is maybe even a push up to this trend line. And then I'd have to assess the market, what it's doing, to see if you can push. If you push through that 59.08, oh yeah, it's going to get ugly. It's going to get ugly. So, I mean, you can come down all the way to this high volume node here. Right? So this is the ES. Okay? And that level is 58.21. Now, let's go over to the NASDAQ. All right? Because the NASDAQ has a different look to it. Remember, I talked about it yesterday. I said, I don't like the NASDAQ as much. There's so much traffic. Okay? Look at it. The actual most traded price of the year moved down a little bit to 214.35. Look at this congestion here. It's the most traded price of this year. Okay? Just look at all of that. And remember what I said yesterday. I said in order for this market to move higher, you need to break that and hold and accept prices to go higher. If you cannot break that level, you're going to go lower. We are lower. Okay? I said that. I said pay attention to that level. Now, that's the most traded price of the week and of this year. Okay? Is it the most traded price of the month too? I think it's the most traded price of the month too, actually. So it's just a monster. It's a monster level. Okay? Now, we have an anchored view up from these highs right here. Okay? We also have broken this trend, this uptrend channel here, right here. And we tested the backside, dropped down, and guess where we went? Here's a US China trade deal right here, anchored VWAP. That's been supportive. And look where we hit. Boom. Okay? Now you can see, I just showed you the lower highs, the swing lows, lower high, right? You don't have that in the NASDAQ. You don't have that. Okay? Look, you broke these lows here. And you have lower high, right? You're trending lower and you can't go higher. Now, somebody might tell you this looks like an inverse head and shoulders pattern. It kind of does, okay? It kind of does. So, you know, this would be your neckline. This would be your head. This would be a shoulder. This would be a shoulder, all right? And that's usually a bullish pattern. So you would look to break that neckline to go up higher. And what's the neckline? It's the most traded price of this year. Okay, so see how patterns and what I'm talking about all work together. Okay, they all work together in unison. All right. So today we do average with a trend line. You can't get above this. I'm gonna be biased short. You can't get above this level, this monster level. I'm gonna be biased short. So let's just say that in this anchor VWAP is still holding the market, right? So what I'd be looking for is a push up to this trend line, or maybe even do a little whoop, hit this anchored VWAP from the highs, right? Try to break this major level, fail, and then take out this low, and now you're going to attack this swing low. You take that out, you got single prints below you, and you could possibly test this anchored VWAP. Okay? And you probably work yourself down to about 208, and probably down to the most traded price of the rolling year, which is 206.84. Okay? This is why I use the volume profile. It's giving me this monster level. And how do I look at it? Remember how I open my channel and I say I use them to find structure in the market. This is my structure. This is my wall. Above here, acceptance is bullish. Below it, I have to be bearish. Okay, now bearish meaning intraday. Doesn't mean like overall macro. Okay. Hopefully that sheds some light on there for you, and that is your hourly charts. Okay. All right. Moving on. Hoping that makes sense to everybody. All right, let's move on. I'm going to change my workspace. We're going to get over to the hourly. I'm in the hourly. To the market profile. All right, we're going to do some recap. All right. All right, here we are. All right, let's look at this. Now, I want to show you something that's important here. Okay, oh, this is the NASDAQ. Let's move over to the ES. Now, I just want to point something out real quick. Even though we're on the NASDAQ, look how beautiful this bell curve is. That is balance. That is balance, folks. Remember I talked about it? I said we're in a balance, and this is all I need to see. Right there. Oh, balance. Okay. Market profile is telling me, volume profile is telling me we're in balance. I saw that with candlesticks, but I'm just giving you an example of, oh, all right, profile's balanced. Great. Now let's look at the ES. Okay. ES is an uglier balance because it's got multiple distributions. Okay. So you got excess, a distribution, and then excess. Not as pretty of a profile. Okay, not as pretty. All right, let's look at yesterday and see what happened and what I did. All right, my trade. So let's do it. All right, so yesterday opened up right here. Remember that poor low I talked about? Right there. It got corrected, right? So what did we do? We chopped, and this was just snooze fest until I saw this. Boop. Finally got a move close to the prior day's close, right? And I said, you know what? The market's not strong or weak, but tech is actually lagging. Then I got short up in here and took that down to here. And I was like, oh, man, this is range bound market. I was looking to break these lows because there was poor structure here. Thin volume, single prints, elephant on a stick, elephant on a toothpick. I mentioned that, okay? And then that happened. Boom, you broke the structure. It was weak. It finally caved in. And then the market rebounded, okay? No surprise. All right, that's yesterday. Now, let's analyze what we're doing now. We're back to gapping down. Okay, here's price 59, let's call it 20. 59.19, let's call it, all right? We are below yesterday's lows, 59.2675. So that is gap fill. Gap fill happens to be the most traded price of the overnight. Okay, we are hitting the most traded price of the month. We hit it in the overnight right here. Boom. 59.08. Oops, sorry. So this is a key level with big demand zone here. I believe it's a 6-hour demand. Okay. That demand zone. Remember, this stays bullish above this level. 59.08. Okay. We are also, that's the only long activity to this much short activity. Okay, that's about 85 to 90% net short in the overnight. Okay, and you can see if you were short here or here, you're getting paid. Short here, you're getting paid. Okay, and we're at a very important level. Okay, so I put that in my cap and go, that could be a possible long. Okay, because those shorts will feel pain if there's a big move up, especially above this gap. Gap fill and the most traded price of the overnight. But we do have supply, and supply, right? We know we broke that trend. Okay, but we know, because I pointed out, there's been lower highs put in, but not in the Nasdaq. Okay, not in the Nasdaq. All right, so we have a lot of supply here that makes me very cautious. Okay, supply zone here, here, and here. Okay, even up here. So how am I going to look at this, right? How am I going to look at this? We're gapping down, but into demand, into a monster level. All right, so let's talk about it. We're going to do some scenarios here. Let's get into it. All right. All right. Price is here. We're gapping down, but a small gap. All right. I remember I mentioned about 85 to 90% net short. All right. So I keep that in my mind. 85 to 95% net short. Shorts have been getting paid from up here, here, and here. Okay. Remember what I just said. So what I would like to see is a nice push down early. Early, right to the edge of this demand, even if it breaks it a little bit. Then a quick recovery, and this is what it's about. You want to take back 59.08. If you can get boom, hold it, fill gap, that will be probably a little battle because you got supply, the gap fill. People are probably going to look to short that and see if you can just work yourself up all the way back to 59.60, the most traded price of the week. And then we're back into balance. Okay? And like I said, shorts are getting paid. Any minute that the bulls take back over, they're going to cover their positions. Okay? Now, this is another key level here. It's the overnight high. What is that? 59.58. And it's the most traded price of the week and of the yesterday. That's important. So I could even see, well, that's where I think the market probably will go. I don't see a market ripping all the way to highs today, but you never know. Okay. Only other thing I'd be interested is, okay, so you do have this 58.67. We have to talk about this demand down here. Okay, now I wouldn't like it to go that low. So I would like to see this 59 right here, this level, 58.80 to 59 right there. That's now if we go like this, boom, 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 quick, market doesn't have a chance to get super weak. Yeah, I'd probably recover. I'd probably be interested in a long, take some profits here and see what we can do if we fill the gap. That's about all I'm interested in. Because below this level, any kind of time spent below it is not good. Moving on. I didn't want to get rid of that, but I did. That's okay. All right, bearish time. All right. Now, we know we have supply here. Okay. We know we are 90% net short. We broke trend. We're at a key level. That is tough sledding to short here. Okay. So what I would like to see is a push lower. You get some bulls come in and you fill the gap right into supply, right into the most traded price of the night. Let's say you fail to find acceptance over and you do one of these. Well, you could try to take this 59.08 out. If you do take this out, you are going to get a healthy move down into this area. Okay? Not a lot of volume here. You can really push. Right? Where to? maybe around here. All right, that's about 58.50. I don't think we go all the way down to a gap, unfilled gap here. Okay, but I think we're due for something. Doesn't mean it has to happen. Remember, May is sell in May and go away, and then usually the market bottoms in June. Doesn't mean it has to happen, but it generally happens. Okay, then you get a summer rally, then you bottom out sometime in October, November. That's how seasonality works. Doesn't mean it has to always work. Okay. The other short here. Now, that's the best short, gap fill, then you dump. Okay. Obviously, you can come up to here a little higher and also take a dive. Okay. Now, if we go up to this level, that's still to me not bullish. It's not bearish, and you probably could see a short in here. I'm not in love with it, but that's a possibility. That's your ES. All right. Now we moving on. I don't know why I did that. Moving on to your Nasdaq. Remember, like I said, very different structure. Okay. And look at the Nasdaq. It's actually right at yesterday's lows right now. Okay. All right. So there's our monster level. 214.50, let's call it, is the most traded price of the week, yesterday, and of the year. Let's make a better line here. That is just the monster level. We are below that level. We are below that level. Right here, price. We are also, where do we close? Can't really see it right now. Well, I know we opened somewhere right here, I think. And pretty much 85% net short. Most traded, look at that. Most traded price is right at yesterday's lows. That's the gap fill. 212.98 is also the most traded price. Look where we came down into. Single prints, we came into them, ate some of those up yesterday, didn't clean them all. And now we dipped into this demand, right? And we pushed right out of demand. Okay. Supply. Like I said, this is the beast level. You can't find acceptance over it. You got to be short. Okay. And below this structure, this little swing low here that I mentioned before, there's single prints underneath. Very poor structure. My boy, Elfie the elephant on a toothpick. Elephants can't be held by toothpicks, but if they are, it's bullish. But if the market gets weak, it will just rip this to shreds. Okay. So we have supply here. We have supply here. We have demand down here. Okay, so the Nasdaq structurally wise, I didn't just see if the ES pushed up, but like this is right at the lows. ES was actually gapping down when we were looking at it. Okay. So this becomes a big area here for bulls to defend. Okay, so this is pretty simple. Let's get into this situation. What the heck does that mean? Oh boy. All right, give me a sec here. Give me a sec. All right, let's get into scenarios. Let's go bull side. All right, down here, right at yesterday's lows. Now, even if you take a dip down, right, quick one, into this demand, yeah, I'm going to be looking to be a buyer in the QQQ. If the market's not that weak and we can hit somewhere in here, higher low, and then you can start making your way back. There's not much in the way here as much as you had in the ES, right? Got room here to breathe, okay? Now, a bear trap I could see if we take this demand up quickly, land right into these singles, right? below this swing low. If the market recovers quick, lower high, yeah, you're probably going to start moving up. Okay. But I don't want to see this market too deep into these singles. So that's the long side. Pretty simple in the NASDAQ. Okay. Short side. We're at gap fill. We're at gap fill. We're at yesterday's lows right now and the most traded price of the overnight. Okay. So here's what you want to look at here. If we push up into this supply and we fail, we go through the most traded price of the overnight. You're probably going to take out the overnight lows and test this area. If you take out the swing low of 211.12, and when the market's weak, we're ripping through these single prints right down here. Okay, we're going to rip right into them, maybe go down to 209. It's going to get ugly. Okay, now the other one that I'm be super interested in, if you get that rally and you push up into the monster level of 214.50, 214.30, most traded price of yesterday, of the week, and the year, and you cannot find acceptance above it, and you start to come back, all the liquidity that made the long is going to get destroyed, and then you could possibly either stop here or really rip. Okay? That's the plans today, folks. Hopefully you enjoyed that. All right, smash the like button if you did. Okay. Hopefully you could join me every day. Give you the market story, the lowdown. I just give you a bunch of information. Those hourly charts have been key analysis for myself, for my trading. Okay. And if you do want to check me out, that is not what you want to see is the elephant. I'm just showing you my boy again. I wanted to show you my Discord, Confluence Trading. Go to my YouTube homepage, join the link. I update the market live, what I'm seeing, what I'm looking at, my trades. Join if you like. All right. Say hi. And hopefully I start live streaming again. I just want to see people interested in that if you are. Okay. So come join that. And everybody have a great day. All right. If you come into the Discord, you will see me update. Please ask questions if you have them. And remember, we have our plan. Stay green. No trade to trade. And I'll see everybody tomorrow or in my